And now we'll discuss SFI Note 1 audit evidence of a specific consideration for a selected items. We'll see what all those selected items and objectives of the auditor. The objective of the auditor is to obtain sufficient appropriate audit evidence with regards to existence and condition of inventory, completeness of litigation and claims involving in the entity, presentation and disclosure of segment information. These are the three things we are going to discuss in this SFI Note 1: inventory, litigation and claims, segment information as per AFRF. The physical inventory counting is conducted at a date other than the date of financial statements. Financial statement consists of on which date the closing stock, on the date of the year end. It is impracticable to count all the stock when all go downs for all the companies on 31st March, right? So for that, what the auditor could do, auditor could perform audit procedure to obtain audit evidence whether to the changes of the inventory, like subsequent sales or subsequent purchases between the count date and the financial statement recorded date. And the auditor is unable to attend physical inventory counting, that is even at the later date the auditor is unable to attend the physical counting, then he should do that on an alternative date and perform audit procedures that are intervening the transaction. And if the attendance at the physical inventory counting is impracticable, that is which is very health hazardous, like for chemicals etc., what he has to do, again alternative audit procedures. You see, all the distance and cost or time, that does not lead to an impracticable situation, only health hazardous situations etc. will lead to that. And that's with regards to the inventory. And we'll see first the inventory portion here. Attendance at physical inventory counting unless to, that's what the auditor has to do. He has to evaluate management procedures for recording and controlling the results of the entity's physical inventory counting, first one. And second thing is observe the performance of management count procedures. You have to observe what process management counting process, and inspect the inventory. Inventory is like their condition, whether they were or like any kind of, if they were you're doing any inventory with regards to the perishable items, whether they were they were perished or something, they were rotten etc., you have to check their condition of the inventory well and perform test counts. What you have to do, you have to observe management count process and perform test counts, and performing audit procedures over the entity's final inventory records to determine whether they accurately reflect the actual inventory count results or not, that is tallying that things. First thing, you have to ask how the management procedures with regards to the counting, and then observe the counting process, inspect the inventory condition and perform test counts and just tally them. And that's with regard to that. And when our inventory, that's the entity's inventory, was at custody of third party like job worker etc., what you have to do, the auditor has to obtain sufficient and appropriate audit evidence regarding existence and condition of the inventory. Why counting procedures here? Because of the existence. Why he has to inspect the inventory? Because for the condition of the inventory. You have to check both of them. Through what? Request confirmation from third party as to the quantities and the condition of the inventory. You have to get a confirmation and perform inspection, that is obtaining audit evidence directly by the auditor in appropriate circumstances. Mostly usually write only this in the the case or scenario or something that was given in the examination. Also do write this inspection also point. And this is with regards to litigation and claims. We'll just move on with that. Yes, now we are talking about the litigation and claims. The auditor shall design and perform audit procedures in order to identify litigation and claims involving the entity which may give rise to a significant material misstatement. Okay, what he has to do, he has to identify litigation and claims that give rise to risk of material misstatement, including what he has to do, how he has to design and perform those audit procedures. Inquiry by the management within the entity and in-house legal counsel, reviewing the minutes of meetings of TCWG and external legal counsel with the what he has to do, he has to inquire management and in-house legal counsel, review minutes of meetings of TCWG and legal counsel, and reviewing the legal expense account. Have to seek direct communication with the entity's external legal counsel. This is something that the evidence that was obtained directly by the auditor is more reliable. The auditor shall go through a letter of inquiry prepared by the management and signed by the auditor, requesting the entity's external legal counsel to communicate directly to the auditor. Observe the process here. You see this management is preparing that, this so and so were the our auditors, please provide the some support or be cooperative with them for all the information they ask for. The management has to give a word. Unless until we can, auditors cannot directly go and ask some legal external legal counsel there, right? So management has to give permission to the external legal counsel to discuss their legal items or legal matters to the auditor of that. So if the management refuse to give that permission, what the auditor has to do? The auditor is unable to obtain sufficient appropriate audit evidence by performing the alternate audit procedures, he shall modify under SC 705. Okay, that's the thing with regards to that. And now we'll see a letter of that inquiry that the prepared by the management and sent by the auditor to external legal counsel should contain a list of litigations and claims and management assessment of identification of litigations and their financial implications, including any costs involved, like any kind of cost that was with regards to the penalties they have to fine or fines that they have to pay or compensations, and a request that entity external legal counsel to confirm reasonableness of management assessment and provide the auditor with further information, the list of incomplete and incorrect. First, what he's giving list of litigations and claims and management's estimate of the financial implications. And what he's asking, whether if the above list was incomplete or incorrect, please provide that information and also provide that management estimates on the financial implications were reasonable or not. He's asking whether these two were right or wrong. That's it with regards to the litigations. And now we'll move on with the segment information, how methods used by management with respect to segment information. What all the information have to be given? All the presentation and disclosure. The sales transfer or charges between. Charges is like when a segment was giving a loan or any kind of while transferring the inventory from one segment to the another, the charge, fixed charge, the one we see in our SCMP, like a dual rate system, a fixed charge. Yes, that was an elimination of intersegment profits, etc., transactions, and a comparison with budgets and expected results against standard costing here, and the allocation of assets and costs among them, assets and costs among them, and the like HO cost and the cost and assets with regards to that, and consistency with prior periods, adequacy of the disclosure, and inconsistencies. That is with regards to SA 501.